Okay, now, if we talk about this tax, that is TX UK. Now, we have as far as the syllabus area is concerned, the UK tax system and its administration. We have the income tax. In the income tax, we will be talking about national insurance contribution, that is NIC. Then we are going to talk about chargeable gains for individual and companies as well. Then we are going to have the inheritance tax. Then we have the corporation tax liabilities. Then we have value added tax. And then we have the employability and technology skills with us. So around 1, 2, 3, 4, 5, 6, 7, around 2 to 4, 6, 7, 7 areas we have of the syllabus. And if we break down these 7 areas, they go into the 9 as well, because we have the chargeable gains for individual and companies. And similarly, we have the VAT for the individual and for the companies as well. Right? So this is the whole syllabus area that we are going to individually take up, and we are going to individually talk about each and everything over here, right? Now, the UK tax system, if we talk about this one, we can also, like, simply have it as we have the individuals over here, right? And then we have the companies over here as well. These are going to have the income tax liabilities. They are going to have NIC on employees, employers, and self-employed as well. Then we have the chargeable gains for the individuals and the companies as well. Point of view, right? We are going to have a section A. This section A is going to have 15 MCQs. These are going to be of 2 marks each. Total is going to be 30 marks. Right? And then we are going to have the section B with us. In the section B, we are in section B, we'll have 3 questions over here. Normally, they are going to be MTQs, that is a multitask questions, and they are going to be of 10 marks. The total is going to be 30 as well. And these MTQs, basically, each MTQ is going to have again 5 questions. Normally, 5 questions of 2 marks each, right? So 2, 2, 2, they are going to make 1 MTQ complete, and that is going to be of the 10 marks, right? And then you have the section C, the most important area of the syllabus, where, or the paper, where you are going to have 1 question, and that is going to be of 10 marks. And then you are going to have 2 questions over here of 15 marks. So that's going to be 30 over here. So 30, 30, 60, 30, 90, and 10, you are going to have total marks of 100, and that is going to be the passing at 50%, right? Now, this one question, this is going to be solely and explicitly from income tax, right? And over here, this is going to be from the corporation tax, and this is something which can be the second question over here. It can be from the corporation tax, it can be from the value added or the inheritance tax and all, whatever, like, the area the examiner sees fit, he can ask you the question. But normally this section C, it is going to be about the corporation tax and the income tax over here. The main focus of the examiner is basically going to be on this side, right? And if I say over here, one thing is gonna be common, and that is we are going to have a Finance Act of 2025 over here. So Finance Act of 2025 is basically going to be over here, which is going to be testable for us, right? Because that is going to be out in at the end of the March normally, at least, right? And that is something which we are going to have applicable in the the June attempt. Now, if we move ahead from here and we talk about the main purpose of taxation. What is the purpose of taxation? One, government collect or collects tax, and it is the biggest, it is normally the biggest source of revenue for the government to finance its expenditures, right? Normally, the government is collecting the tax, and normally the tax is the biggest source of finance for the revenue, or the revenue, for the government to finance its expenditures and all. Okay. Now, any national budget, any national budget of any country, that always shows a big chunk of income tax collection. I mean, if you look at the national budget of any country or something, right, that is going to provide us with the biggest chunk on the national budget is basically going to be from the tax that we have, right? Second point, I mean, if we move forward, that is the economic factor. Now, from the economic factor point of view, let's say, or let's assume you collect 100 pounds in the name of tax, right? And the overall expenses for the year are 150 pounds, right? So deficit, the fiscal deficit of 50 pounds is going to be there, right? And for this, you will have to borrow the money as to finance the operations, right? Like for example, let's say that you means the government is earning 100 pounds in the name of tax, and overall the government spending is like around for 150 pounds. So technically you are into a deficit of 50 now. So in order to have this 50, you will need to borrow this money, right? And when you are going to borrow this money, obviously, next time again, you will have to borrow this money 50, plus you will have to borrow more to finance the interest payment for this 50, which you have borrowed earlier as well, right? So technically, we go into a circular deficit for as far as this shortfall is concerned. But if if your tax collection is 200 and your expenses are 150, you are now in fiscal surplus. You are now in fiscal surplus, right? Because over here, you are going to have the surplus of 50 pounds, right? Now, the third number is the social justice. Social justice is by charging a higher percentage to high earnings individual and lower percentage to low income individuals, right? Now we bring in a social justice as well because the low income individuals, for them, the government has to do something as well. So obviously, the persons who are earning a lower amount of tax or something, sorry, no, lower amount of income or something, they normally pay the tax on a lesser percentage, and the people or the persons or the individuals who are earning high, they pay the tax at a higher percentage as well. Why this we bring in a social justice? Because technically speaking, if the government is earning from its, like, people, so obviously who is earning more should pay more tax, and the one whose earnings are on the lower side, he should be paying the tax on the lower side as well, or for the lower amount as well, right? So that is how we bring in the social justice overall speaking related to this as well, right? Now, if we talk about overall, let's have it over here. The main principles of taxation. Number one, we have progressive taxation. Progressive taxation is greater the income, greater the tax percentage, right? And then lower the income, lower the tax percentage, right? Now, majority of tax system in the world is based upon this progressive taxation. Majority of the tax system in the world is based upon this progressive testing, right? That is what we have. I mean, if we talk about from the progressive testing point of view is concerned, right? Then after that we have regressive taxation as well. Regressive taxation is as the level of income increases, the amount of tax charged on commodities as compared to income decreases. What does it mean? For example, your income is £10,000, tax on petrol, which you are paying, is £10, right? Now, you need a total of, let's say, 50 liters in a month, right? Now, say your income increases to 15,000, tax on petrol is still £10 for you, right? That is a regressive testing system. Regressive testing, what happens, it doesn't matter whatever your level income is, you are going to pay a constant tax on the commodities or whatever the things that you are consuming, right? I gave you the example of the petrol over here. Say in case if your income is 10,000, your income is 15,000 or 20,000, whatever your requirement is, whatever your usage is, at the end of the day, you are just paying the same amount of tax which you were paying before, right? That is called as the regressive taxation. Then number three is proportional taxation. Now, proportional taxation is basically the percentage of tax remains the same as the level of income increases. For example, your earnings are 10,000 and you pay taxed at 10%, and that is £1,000, right? Now, your earnings go to 20,000 and you pay tax at 10%, and that is going to be what? 2,000. That is your the tax percentage that is going to be the same over here, right? That is a proportional taxation that you just have to pay a fixed amount of a percentage in the name of the tax, right? Now, if I talk about this proportional system has been there in the Gulf. If I talk about the Qatar, the Doha Qatar, basically it has been over there. The proportion system of the tax has been there. Into the armed forces. The people over there in the armed forces who are working, they pay the tax regardless of what they are earning. They pay a tax at their on their income at a fixed percentage. That is the proportional taxation system. They just have a flat percentage for which they have to pay the tax and all, right? That is called as the proportional system. I mean, in practical, in live, if you want to know about, that is how they are paying the tax, right? So this is one of the system as well. And then you have one more thing over here, that is where is the fourth going? Okay, where is it going, by the way? Okay, interesting. Okay, four is ad valorem taxation. Ad valorem taxation is you apply and calculate tax based upon the value of goods or services that you receive, i.e., based upon their value. That is value added tax. That is the VAT which we have studied, right? Ad valorem taxation is whatever the goods, whatever the services that you're having, right? At the end of the day, you are going to pay the tax according to what you are getting, right? As an end user or as a consumer. That is called as a ad valorem over here, right? Now, moving it from here, the next thing that we have to, talk about over here is another concept that we have, and that is of the tax authority that we have over here, and that is called as the HMRC. HMRC, Her Majesty Revenue and Customs, is basically the tax department that we have in the UK, which deal with the the tax matters and all. Now, obviously, this department is going to control and administer all the areas of the UK tax law, right? Now, the purpose of the HMRC is to make sure that the money is available to fund the UK's public services, help the families and individuals with the targeted financial support as well. In order to run the operations of the government, the UK public services, obviously, they need the funds. And those funds, HMRC is responsible to ensure that the funds are, or enough funds are available to run the public offices and all. And similarly, the funds are also available to help the general public at large who are in need of a help. For example, in the form of the health services, in the form of uh, the unemployment funds and all, nah? Right? So, for example, if you don't have a job or something, you are going to be provided with a fund from the government, right? And they are, going to help you, and they are going to facilitate you, and they are going to cater you in this, that how you are going to, have them they are going to be helped by the government. That's it, right? And then obviously this point over here, first thing is we have the HMRC. In the HMRC, if we go by the hierarchy, First thing is we have the commissioners over here, right? So heading up HMRC are the commissioner whose main duties are to implement the statute law to oversee the process of the UK tax administration. And then the staff who work for the HMRC is known as the officers of revenue and customs. So first we have the commissioners, then we have the officers of the revenue and customs, right? And HMRC have offices located all over the UK, many of which have specialist functions such as dealing with the international businesses or large companies. Now, I believe in the Mauritius as well, the tax department that you have, it will have multiple offices. One dealing with the individual, one dealing with the local companies, and one dealing with the larger or the international businesses or the international companies, right? So that same is the case over there in the UK as well, that you have designated offices where they are doing their work, and some offices are over there only catering as far as the corporate clients are concerned, right? I mean, we are into the corporate banking. We have this concept of even in the banking as well. One is the corporate banking and one is the consumer banking, na? So over here, this is the same case over here in the taxation as well, that for the corporate clients, they have the different offices where they deal with the corporate clients, and then they have the different offices where they are dealing with the individual clients and all, na? So they go by multiple ways, right? And then obviously it's also stated over there that most taxpayers will never deal directly with a local tax office, as the HMRC encourages the taxpayers to file the tax returns online using their website, or to answer the queries or telephones or email. A number of specialist helplines like the self-assessment helplines are available, right? So normally the UK encourages its taxpayers to straight away go online and to file there as far as the tax return is concerned, right? They don't want to have the paper interaction. They try to avoid it because they have simplified this thing, in such a basic manner that each individual is able to do so. If that individual has a bit of a knowledge, then he can easily file for his own return as well. And normally, in order to file the return, they have their own website, hmrc.gov.pk. Sorry, not pk but uk, right? On which you go and you simply open up your while logging in, you open up your account, and then you go and you have the option to file your return over there. And if you have some queries or something, normally they have the list of the questions for the self assessment, and they have the helpline number as well by which you can call and you can ask for as far as any guidance related to any self assessment is required and all, right? And then obviously normally the taxpayers, they are encouraged to file their return online and to obviously to pay their tax electronically as well. They want to avoid it as far as handling the physical cash is concerned because of the security and all, right? And then again, the companies, they have to pay the tax electronically no matter what. It's compulsion for the companies to pay the tax electronically. But for individuals, they still have this option that they can send their tax returns via the mails and the payment as well via the post as well, right? They can still send their returns and payments by the post if they wish, right? And then under the self assessment, the responsibility for reporting the correct amount of taxable income and paying the correct amount of taxes delegated to the taxpayer to self assesses. Yes, this is an important point over here. This is a very crucial and a very important point over here as well, as the tax authority is encouraging you to do the self assessment by yourself, online, and then they ask you to file your return online as well, right? So they straight away give this responsibility onto your shoulders as well, that the return which you are filing or the amount that you have calculated for as far as the tax is concerned, it's gonna be accurate and you are responsible for that as well, right? The self assessment that you are doing, the self reporting that you are doing, they are putting this responsibility onto your shoulders, that you have to ensure by your means that the amount of tax which you are paying is correct, and the amount of the liability that you have calculated for your own self is correct. I mean, this is your responsibility to know about the laws, the regulations, and everything. You are responsible. If during the sample check, if they are randomly selecting some returns and they are checking up and evaluating, if they find some discrepancy or something, they are going to charge you with a penalty as well. You will be fined, because they straight away say that if you are filing yourself now, so this is your responsibility for your own return to be correct. If there is some act of forgery, or there is some sort of an deliberate mistake by your end or something, not even the deliberate, but the indeliberate or the unintentional mistake as well, you will be fined for that, depending upon the case to case as well, right? Okay, but still, officers of the revenue and customs can still be requested to do the calculation of the tax payable based on the income reported for individual taxpayers, but not for companies, right? But still, you can go and you can request and the officer of the tax or someone to have a calculation on your behalf as well. I mean, if you have doubts about it, if you have an issue about it, you can go and you can ask from them as for the help as well, right? And then we have this sources of tax law. Now, if I go and I talk about the sources of tax law, or the case law, the statute law, right? Over here, we have this statement of practice, extra statutory concessions, internal HMRC manuals, HMRC website leaflets and booklets, and detailed technical guidance. And the statute is the biggest one. I mean, you straight away create a tax law. That is obviously going to be the source law for the tax that you have, right? And this is obviously a law, and therefore it has to be abided by in any case, no matter what. And the tax legislation is normally updated each year by one annual finance act that follows from the proposal made by the Chancellor of the Exchequer in his annual budget statement, right? So the state law, that is something which you have to follow. And obviously, this law is going to be in the Finance Act as well, which is passed every year in the the government hearings and the assembly and all that, right? And then the statutory instruments are issued where detailed notes are required on an area of tax legislation. Statutory instruments basically that is a detailed guidance that you are going to have related to as far as the tax and everything is concerned. Now, the case laws refers to the decisions made in the tax cases brought before the courts. Like, for example, normally these are the cases where normally we look to, or we see to have overall different multiple companies who have filed for some cases or something, right? And over there, what happens is basically if they have a dispute or something and they go into the court of the law, so they have these case laws over there, and obviously often the case challenges the current tax legislation or argues a certain interpretation of the tax law should be applied. Normally, they are at times challenging the tax law, or at times they are challenging the interpretation, they want to have, or the interpretation which they think is going to be the appropriate one related to any law that has been raised or that has been created by the tax authority. Now, obviously, these rulings, they are going to be the binding ones, obviously, and therefore they provide the guidance on the interpretation of the tax legislation as well. Because obviously, whenever there is, a decision taken by the court, obviously the explanation to that decision is there as well. So if the court is going to take a decision A or decision B, depending upon the case's outcome and all, and the court is going to explain the reason for the decision as well, nah? Right? So with that explanation, you can have an interpretation related to a specific law as well. I mean, as far as the case and everything is concerned, right? And then we have the HMRC guidance as well. And the guidance is going to be where you have some complex law, a complex situation to understand, right? And that complexity is more or less open to misinterpretation, right? So we have a further guidance issued by the HMRC in order to explain how to implement the law and give their interpretation of the law as well. And the main type of guidance are the statement of practice. Apart from the statement of practice, you have extra statutory concessions as well. Now, extra statutory concessions, then you have the internal HMRC manuals as well. You have the HMRC, website leaflets and booklets as well. Then you have the detailed technical guidance as well, which is available to you, right? So these are the stuffs which are available, and via which you can go, you can move, and you can have a detailed the guidance and analysis of as far as a particular uh, you know the law or the tax legislation is concerned, right? Now, moving ahead, I mean, again, if I talk about overall the book point of view related to these topics, as far as the income tax is concerned, we are going to talk about the tax applied on any income earned, right? Any income earned, we can have investment income, we can have employment, self employed, property, and the pension income as well. Now, if I talk about from the book point of view, we are going to have like around 9 to 10 chapters related to this area, the income tax. Yes, you read it right. 9 to 10 chapters are going to be there. Then we have national insurance contribution that is payable by employees on their things beyond a threshold payable by employers their employees earnings when they are beyond a threshold and payable by self-employed on their earnings when they are. As for NIC is concerned, you are going to have one chapter in the book. Then you are going to have capital gain tax. Capital gain tax payable by individuals, payable by companies. And the capital gain tax, you are going to have the disposal of assets like land, building, shares, antiques, right? So you are going to have their, the capital gain tax over here. And the book normally we have around, I guess, 2 to 4 chapters. Like, I guess three, yeah, 3 chapters are related to kind of as far as the individuals are concerned, and one is related to the corporation or the companies, right? And then after the capital gain tax, you are going to have the inheritance tax. In the inheritance tax, we are going to talk about that this tax is payable by person or executor appointed by will or designated by court who is responsible for disposing of the state of the death estate of any individual who has died as well. Okay, here we go. right? So this is basically inheritance tax is going to be payable by the person, executor, appointed by will or designated by court, responsible for disposing of the state of the death or the estate of an individual who has died, right? And the inheritance tax is also, you know, uh, payable on certain gifts as well. If we get certain gifts on them, we have to pay this inheritance tax as well. And it can be on lifetime gifts, it can be on the death of individual as well, right? So lifetime gifts and the death of individuals as well, right? And in inheritance tax, we are going to have one chapter. We are going to have one chapter in the book, and we'll be talking about those as well. After the inheritance tax, we have the corporation tax. Corporation tax is basically payable by companies only on their earned profits. For the corporation tax, we'll have like around 6 to 7 chapters, right? And then we are going to have value added tax that is payable by end user, the user of goods or services. And for the value added tax, we'll be looking at 2 chapters, right? This is what we have over here. Overall speaking, from the book's perspective, how we are going to approach onto this and all. Now, uh, let's discuss a concept, an interesting concept over here I want to talk about, and that is called as the tax avoidance or tax evasion. Tax avoidance is basically legal means of avoiding tax, whereas tax evasion is illegal means of avoiding tax, right? Now, legal means to reduce or avoid your tax by using the tax rules for your own benefit, right? Legal avoidance means, like, you are using the tax rules, right? You are using the tax rules to avoid your tax or to reduce your tax. You're not hiding anything. You are just using the rules which are available to you, and via that, you are reducing your amount of tax. Like, for example, you have a rental property whose rent is 10,000 pounds, right? Now, if you have an income of, say, in case 10,000 pounds, then on that, you have to pay the tax at 10%, which is going to be 1,000, right? Now, you are, or you have a spouse with you, right? If you distribute the income between yourself and your spouse by 50-50, like, for example, you get 5,000, your spouse gets 5,000, right? Then, because your income is at 5,000, your tax rate is 5%. Because of which, what happens? Your tax, 5,000's 5% is 250. 5,000's 5% is 250. So in total, the tax which you are paying on this income is just going to be 500 in total, right? What you did, rather than showing this whole property income as yours, you showed it that this income is shared between you and your spouse. You get the 50-50 between you guys. You have the arrangement of 50-50. Because of which, what happened that the tax, because my income reduced to 5,000, my spouse's income reduced to 5,000, so our tax percentage reduced as well. Progressive tax system. Higher the income, higher the tax, lower the income, lower the tax. So we distributed the income. We both got the 5,000, 5,000 income. So what happened? Our tax reduced as well, right? Now, this is a legal means. This is a legal way to avoid the tax, right? Now, tax evasion, on the other hand, on the other hand, is a legal means of avoiding the tax by means of misinformation or misstatement or withholding information. Like you are earning £15,000 as a rental income, but you are hiding it from tax authorities by not disclosing it, right? Done. So illegal means is to avoid the tax by illegal means. So you are just hiding your income and you are avoiding as far as your tax is concerned. Done. This is the point over here. Okay, now let's just talk about income tax. Income tax, any tax which is payable by a UK resident, that is an assessable person, during a tax year on their income. Right now, we have a UK resident, we have an assessable person, we have a tax year, and then we have an income over here. First thing first, let's just talk about why is it not working properly. Now it's going over there. Okay. Now, residency. Residency is if resident of UK, you will pay income tax on their worldwide income. If non-resident, then pay only on UK earned income, right? Let's write pay income tax on UK earned income, right? So if you are a UK resident, you are going to pay the tax on the worldwide income. If you are not UK resident, you are going to pay the tax only on the income which is earned in the UK, right? So this resident is with this residency. Then we are going to have the assessable person. Now, an assessable person is going to be means the person who needs to pay the tax. Over here, individuals over 18 years, married couple, and children. Even the children are the assessable persons, right? This one and this one as well, right? So this accessible person is over here. Then the tax year, uh, if I talk about this tax year, it starts from 6th April and ends on 5th April the next year. We are going to have a tax year of 25, 26 over here, right? So that is a tax year. And then we have the income. We have the income as well. This income, this one. This is going to be over here. Income which we have earned from saving income, non-saving income, dividend income, and we are going to have some exempt income as well, which is exempt from tax. Right? Okay. Uh, let's just take a break. I just need 5 minutes. I'm just tired now. Let's just get up from our seats, walk around a bit, and just come back in like around 4 5 minutes, and then we are resuming because now we have to look at this. Okay, I'm back. So let's resume now. So we talked about the income over here. Now, let's just go with residency. The first point, UK resident pay tax on their worldwide income. Done? Okay. Now, if the person is non-resident, if the person is non-resident, then it's not part of syllabus. So just simply ignore it. We are done with that. Okay, if the non-resident, that's not going to be the part of the syllabus, so you don't have to worry about. Now, in order to establish the residency of a person, HMRC has given you 3 tests. Test 1, automatic non-residency test, right? Now, if test 1 pass, right? If test 1 pass, the person is non-resident, right? And if test 1 negative or not clear, then move to test 2, right? Now, I can show it to you by some way of a flowchart as well. Here we go. Here we go. And here we go. And then we have one here. And we have one here. This is test 1. And the test is automatic non-UK resident. If yes, End of story. If no, then we have to move to test 2. Right? Now, in test 1, in test 1, a person is non UK resident if they have lived in the UK during a tax year for less than 16 days, 46 days, or 91 days. Now, if it's less than 16 days, that is going to be with your eyes closed, non UK resident. If they have lived for more than 16 but less than 46 days, then we have to ask the question, was the person, okay, we have to go on to the next page. Was the person UK resident in last 3 years? If yes, then you are going to move to test 2. And if the answer is no, then that person is non UK resident. And if the person has lived for more than 46 days but less than 91 days, then has the person working full time overseas? As a person working full time overseas, either it's going to be yes or either it's going to be no. If it is yes, he is a non UK resident. And if he has not been working overseas full time, then if he has lived for more than 46 days and less than 91 days, then you have to move to test 2. So these are the points which you have to keep in your mind. If the person went to the UK and lived for only 15 days, 14 days, nothing more, straight non UK resident. If the person lived in the UK for 30 days, so we are going to see that has the person been a UK resident in the last 3 years or so? If no, then straight away the answer is he is going to be a non UK resident, right? If he has not been a resident, then he is going to be a no, he has not been UK in the last 3 years or so, right? Then he is going to be a non resident. But if he has been in the UK in the last 3 years as well, then you are going to go to the test number 2, right? Or if the person lived in the UK for 80 days or something, right? Then the question is that is the person working overseas full time? So if he's working overseas full time and he's just over here for the visit or something, for the family or something, then he's automatically a non UK resident. But if his the person is not working full time overseas, then technically speaking, we have to go to the move to the test 2 because the test 1 is not clear over here. Right now, in test 2, in test 2, we are going to have test 2 is about automatic UK residency test. One was non-resident, two is automatic UK residence, right? Now, if this is the case, then you have to, ask the person this one question or this question or this question. Then you'll get a this answer. But okay, let's just set it a bit. Here we go. Here we go. Here we go. But we can have this and this on the side as well. First thing, if the person has lived in UK, for at least 183 days. If the person has lived in the UK for 183 days, then automatically he is going to be a UK resident. I mean, in a year, if the person has spent 183 days in the UK, he is going to be called as a UK resident, right? If the person has his only home or house in UK, he is going to be a UK resident. Or if the person is working full time in UK, he is going to be a UK resident. So if he's working in the UK full time, similarly, if he has only home or house in the UK, or he has been living in the UK for 183 or something, right? He is straight going to be a UK resident. But if you are unable to clear, that if the person has been living in the UK for 183 days or not, he has one home in the UK and he has one home somewhere else as well, and he's working or he just started working full time. He has not been in the UK for so long. It's been 2 or 3 days that he has started working full time or something. So if it's not clear, what you got to do is you have to move to test 3, right? So you have to move to test 3. Like for example, I get to have a question over here. Like the unclarity thing. Let's see the participants. Okay, we have okay, the easiest name is Dia. Other ones are easy as well, but still the shorter name. Miss Dia is over here. So Dia lived in UK for 150 days and she owns a house in Mauritius as well, right? So now we have a question. Is she going to be a resident or not? Right? She lived in the UK for 150 days, right? And she owns a house in the Mauritius as well. So now the question comes in, is she going to be a resident or not? Because technically speaking, if she lived in the UK for 150 days, now the question comes in, it's obviously more than 16 days, more than 46 days, and more than 91 days, right? And she hasn't been in the UK for the past 3 years or so. She is over there for the first time, right? Now we go to the move to test 2. Now, she lived in the UK for 183 days. No, she did not. She only home in the house in the UK. No, she has a house in the Mauritius as well. And if she's working full time or not. Now, technically speaking, if she's working in the UK or not, we don't know at the moment. So technically speaking, this question is not clear yet. So technically, we are going to move to the test 3 over here. Now, test 3. This test 3 is a combination of, or this is called as ties test over here. Test 3 is the ties test over here. And that is the comparison between number of days live in UK or ties within UK. That is a comparison between the number of days that you have lived in the UK along with the ties that you have in the UK, right? Now, number one, the ties in the UK, it can be a family ties. For example, your close family members are living in UK. For example, your spouse is in UK, your civil partner is in UK, or you have minor children in UK, right? So that is what the family ties is. Number two is accommodation. And in the accommodation, you are going to ask that do you have a house in UK or you used for living in UK during a tax year? I mean, you have a house and you use that house to live in the UK. These are two different questions, okay? I mean, you might have a house in the UK, but it's rented out and you don't live over there or something. You know, it can be the scenario as well. Then you have substantive work. In the substantive work, you have total 300 days, right? 300 days of work in a year. Out of those, 200 days worked in UK. So we say if you are working substantially in the UK, so this test is met as well. Similarly, you can have the days over here as well, the days test. That is, if you spend more than 90 days in either current tax year or previous tax year or combined in both tax years, right? So you spend more than 90 days either in the current tax year, the previous tax year, or by combining the both tax years, right? So you have to see that how many days did you spend in the UK. Done. And then the country test. The country test is that if you have spent more time in UK than any other country, for example, there are 365 days a year, and you spend 30 days in UK. Apart from that, you were on a business tour, and during the whole year, you did not stay in any of the countries for more than 20-25 days. So technically, the UK was the one where you lived for 30 days. Apart from that, you went from world to from country to country, but over there, your maximum stay was for like 20, 22, 25 days, not more than that. Right. So technically, you revolved around the world, you stayed in different countries, but your stay was never over 20-25 days, right? So in this case, you are going to say that you spend the time in the UK, and in the UK, it was more as compared to the any other country that you have, right? Now, this ties test is something which is shown via this paragraph or this table as well. Individuals leaving the UK and arriving in the UK. To determine the residency status of individual, consideration is given to the automatic non-UK residency and UK residency tests. And then if none of the automatic tests are met, how many of the sufficient ties tests are satisfied together with the number of days spent in the UK, right? Now, as shown in the table below, if the days in the UK are less than 16, it doesn't matter you are previously resident or non-resident, you are automatically going to be a non-resident. If 16 to 45 days are spent, you are previously not resident, so you are automatically non-resident over here. If you spend more than 183 days, it doesn't matter you are previously resident or not, you are going to be an automatic resident. But for in between the days, if you are previously resident, you have to meet these ties. If you are previously not resident, then you have to meet these ties, right? Now, this ties table this is something which is going to be provided to you in the exams. Okay, this ties table is something which will be provided to you in the exams, so you don't have to worry about. You will be provided with the tax table, and in the tax table these ties are going to be there, so you don't have to worry about it, that how you are going to tackle it up or how you are going to solve it up. Like for example, uh let me just put up an example over here. Just give me a second. I just have to copy of the example over here. Just 1 minute. I forgot to open it earlier. Okay. Here we go. Test your understanding 9. This is from your book, the Kaplan book. Now, question number 1. Explain whether or not the following individuals are resident in the UK in the tax year 21-22. Now, Dieter was born in Germany. He has lived in his hometown in the Germany until the tax year 21-22, when he came to the UK to visit on 10th June 2021 until the 18th January 2022. So for this, what you have to do is you just have to see that for how many days he lived in the UK. He was born in Germany, he lived over there, and he just came in the current year. So technically speaking, uh, you have the June, in which you are going to have 20 days, right? Then from July to 31st December, there are 365 days in a year, na? So 365 divided by 2. How many days do you get? I mean, 6 months. You lived over there, na? So 365 by 2. You get 183 days over here, right? And then for the January, you lived for 18 days as well. So total 20, 183, 18. You live for 221 days. Yeah, there for 221 days. Now look, if the person has lived in the UK for more than 183 days, this is 221 days. So he is going to be an automatic resident over here, right? So over here, this dieter is going to be an automatic resident over here, right? Then Simone was born in France. She has lived in her hometown in UK, France until the tax year 21-22, when she came to the UK to visit for a month, right? So she came over there and she lived over there for like what? 30 days? Now, let's just go up on test 1. If the person has lived in the UK for less than 46 days, so 30 is less than 46 but above 16. Was the person a UK resident in the last 3 years? Now over here, the Simone, she was born in France. She lived over there in her hometown or home country, and she just came to the UK, right, for a month only. So technically, she has never been to the UK in the last 3 years. So technically speaking, she is going to be a non-UK resident, right? Then we have a third point over here, and for the third point, we have to copy the rest of the question as well. Here we go. Fred has always spent more than 300 days in the UK and has therefore been the UK resident. He gave up work on 5th April 2021, and on 18th May 2021, he set off on a round the world holiday. He did not return to the UK until the 6th April. Okay. So he stayed in the UK for a couple of days, a couple of months, Then he left the UK for a world tour. And then he came and he did not return until the 6th April. Now, initially, he spent 5 weeks in his second home in Portugal, but did not spend more than 10 days in any of the country while he was away. Now, while he was away, he kept in touch with his wife and young children who remained in the family home in UK. Right? Now, if we talk about this one, he was a previously resident over here. Right? So, if the person is previously resident, and he gave up the work in 5th April, and on 18th May he went for around the world, right? And over here from 5th April, 25 days over here, and 18 days over here. So 25 plus 18, what's the total? 25 plus 18, 43 days. So he has been in the UK for 43 days only. Then he went and spent 5 weeks in his second home in Portugal, 7 days a week. So 7 5 are 35. So technically he stayed in the UK for more period than any country. Now if we go up and the person is a previously resident and he has lived in the UK for 43 days, 16 to 45. Now, so 43 days he lived over there. So he has to meet 4 UK ties. The 4 UK ties or more have to be met in order for him to be a resident. Now, when we go to the 4 ties, number one, he has the family ties with him because when he was away, he kept in touch with his wife and his children. This is over here. He kept touch with his wife and young children who remained in the family home in the UK. So he has a family home over there as well. So accommodation is over there as well. So this is met as well. Why is it not working? Okay. So he has accommodation over there as well. No substantive work because he was working, but now he is not working. He spent more than 90 days in either current tax year or the previous. Yes. We can say yes, spend more time in UK than any other country. So this test is met as well. So 1, 2, 3. 3 tests are met. But for this, for to be a resident, the 4 UK ties were to be met. The 4 UK ties are not met. Only 3 ties are met. So if in only 3 ties are met, we cannot say that he is he cannot be a UK resident, right? Because 4 ties were to be met, right? But only 3 ties are met over here at the moment, right? Then family ties are there. But yes, the number of days are over here as well because he has spent more than 90 days in the current tax. Or the previous tax year or the board tax year. This is met as over here. This is met over here as well. Because he lived in the 43 days over here in the current year. Then last year he was a resident over here. So 1, 2, 3, and 4. 4 ties are met. No, he is going to be a resident. 4 UK ties are met for him. He will be a UK resident. He will be a UK resident. My bad. He is going to be a UK resident. It's true, right? And then we have. Is there anyone else? Olga, a housewife, has previously visited the UK on holiday for 30 days in each of the last 5 years and was not a UK resident in those years. On 6th April, she purchased a holiday cottage in UK. So, holiday cottage in UK has been purchased. In the tax year, she visited the UK for 80 days, staying in her UK home apart from 2 weeks when she stayed with her 17-year-old son, who came to study in the UK. For the remainder of the year, she lived in her home in Germany. So for the past, she was not a UK resident, not previously UK resident. And then she lived over here for 30 days. So let's just go up. 30 days is going to be over here. And 30 days. So she's only not automatically not resident, but she has been to the UK in the past as well. So, but technically, if I combine the number of days, no, she lived in the UK for 80 days, not for less than 45. Come on. Not the 30 days. I mean, she normally previously visited for 30 days, but this time she lived for 80 days. So 80 days is over here. 4 UK ties are to be met because she's a non-resident. She has her house over there. She has her family over there. 2 ties are met. Nothing more. 2 ties are met. So she's a non-resident over here. She is going to be a non-resident over here because her son is over there and she has a holiday cottage. Nothing more than that, right? So she'll be a non-resident over here, right? So this is what I have over here for the day. This is the first class, so I don't want to rush. We will start officially as far as the income tax is concerned from our next class. Today, I just wanted to give you guys an idea how the things are going to progress and all. And plus, I wanted to, give you the basics. But even then, with the basics, if I talk about from the Kaplan book point of view, we are done with the 2 chapters, the first 2 chapters, right? So I don't want to push. It's just that it was kind of like, a healthy discussion based scenarios that we had related to like, each and every aspect which we just talked about. I hope it's clear to you. I mean, if you guys have any question or something, you can ask me, right? Otherwise, we are good to go. Any question, anyone? Any question, anyone? Okay, there's all clear. We have, okay, Shaisa is saying it's good for her.
Good for me as well.
Okay, Ms. Vidita is saying it's good from her side as well. Okay, fine. So, okay, Ms. Anushka is saying no questions for me. So everyone is almost like clear. Okay. This is saying. Okay, now, overall speaking, I would like to stop over here for the day, right? We'll resume again from the next week and then we'll formally start off and then, we'll go formally with